Are you gambling in the stock market? This question has a lot of permutations to it, and there's so many little subtleties around it. Now, for me, it comes back to how you define gambling, and then how do you define investing. Today, I just want to touch on what I think gambling is and what I think investing is, and how I think the two are very different. So for me, gambling is all about a one-way bet. It's really about entertainment, and really you're not expecting to win. And this might seem a little bit counterintuitive, but there's been plenty of research done around uh, purchasing lotto tickets and who buys them, why they buy them, and what the psychological impact of buying a lottery ticket is. Because the value of a lottery ticket, and we'll just say that it's $10 for argument's sake, is that it's the entertainment of if you won, what would you do? And everyone sort of goes off in a bit of a daydream and they think, I'd buy a house and I'd buy a car and I'd go on holidays and I'd look after friends, I'd give some to charity, and there would be a long list of things that a lot of people would do. And I think a lot of them would be very, very similar. And when you look at the price of that entertainment, it's relatively cheap. It's $10. It's cheaper than a movie that would last for 3 hours. And we know that there are chemical responses in the brain that do make you feel good throughout that process. I don't want to go into that detail in this video. When it comes to investments, I suppose there's a couple of different ways we can approach it, because we can break them up to not only what your overall goal is, but also what kind of portfolio you have, what level of risk you're willing to take, what's your tolerance to risk, what's your capacity to take risk, and so on and so forth. Now, for me, making an investment and putting money into companies, stocks, the index, financial assets as a whole, isn't gambling, because what you're really looking at is the underlying idea that companies, businesses as we know them, they go out, they make a product, they sell that product to a customer, and they make a profit margin on that product. Now, these products come in different shapes and sizes, everything from cars right through to mortgages. There's a range of different products. Now, some are commodities. You think of mining companies who actually dig commodities out of the ground. Iron ore, copper, zinc, gold, drill oil. And then you look at other companies who make highly specialized products like Apple with the iPhone or Samsung. And in those situations, you're really buying the idea that telecommunications, for example, will continue to be profitable. People will still use their mobile phones. People will still borrow money to buy houses. And for me, it really comes down to a question of valuation and how that sector of the economy is doing. Now, one of the beauties of this is when you take an index-based approach where you're buying the marketplace as a whole, you're essentially saying that capitalism works. Companies are going to continue to make products and deliver goods and services to consumers, and they're going to receive a profit from that. Now, I can go down a couple of different routes with this, but I really do want to keep this video short. The main takeaway that I think you need to know is that gambling is more about entertainment, and investing is really about purchasing an asset that's going to deliver income and capital growth in the future, and it's going to provide you with financial security. Now, with that said, there are segments of the market that are genuinely gambling within the stock market, for example. And I want to cover things like out-of-the-money puts and calls, as you know, options, futures, and a variety of different derivatives, because there's parts of the derivatives market that step extremely far away from the original purpose of hedging and minimizing risk, and it moves straight into pure speculation. And some of it is highly leveraged.